Hi guys, this is Mark from the Patterntrader. It's Monday, August 17th. I'm back with another video report. First off, we're going to look at the trade setups that we put in yesterday, Sunday. We had three trade setups. We had short the euro versus the Australian dollar, short versus euro versus US dollar, and long US dollar versus Canadian dollar. First, we're going to check out how those trades did, and then I think I've got a doozy of a trade for you for tonight's session. So first off, we're looking at the euro versus the Australian dollar. And as you will recall, yesterday we're focusing on this very negative price action. We have two key reversals where the market made new weekly and monthly highs, reversed direction, and closed exactly on the low side of their trading range, also forming a double top. Then in the last 2 days, Thursday, Friday, we had this consolidation, couple of inside day bars. And as you will recall, I wanted to sell this market at 150.47 on a stop. After going higher, it triggered our stop. I was hoping that this market would go a little bit lower than it did. It went just under the 150 area. We did take off some of our positions there. We're still holding half the positions. I still like this trade, but what we like to see with our analysis is very good follow through. But this being August, a quiet time of the trading month, we don't have any high expectations, and we want to be very careful how we manage our trades here. So again, we still like this price action. As you'll recall, this double top will not be confirmed until a penetration of this neckline around the 147.5 area. We're getting in a little bit early. There is a big trade report coming out of Australia tonight, so we're going to keep an eye on these positions very carefully. We've got our stop just above our initial position here, and we're watching this very carefully. But I very much like this price action. It still looks weak to me, and I think we could have a thrust out of here as a catalyst from tonight's report. So let's move on and look at the euro versus the US dollar. In my commentary yesterday, I was remarking how I thought that the euro started running out of steam last week. We had the presence of these two inside day bars, so the market was not able to continue its upward thrust. And we were looking at this double top as potentially a catalyst for the next major direction in this trade. We're also looking at the presence of a descending wedge. So it's got a number of very bearish signals going on here. We did break below our sell stop yesterday. As you'll recall, we put a sell stop under the low of Friday's session at 110.98. We're trading just a hair lower at 110.76. But to me, this market still looks weaker. We've still got our positions on. We put our overhead stop at 111.40. And for now, I'm keeping the position intact. This market could trade all the way back to the 108 area within the next couple days or weeks. So we still like this market short. It is a bit of a congestion back and forth. This is August, so that we're keeping an eye on the risk levels of our trades. The last trade we're looking at that we put in yesterday was the dollar versus the Canadian dollar. Okay, so this is the dollar versus the Canadian dollar. Didn't quite work out as we expected. We were looking at this inside day bar in an uptrending market. And again, what we look at is the market confirming our analysis. So initially, the market did explode out of our buy stop level at the 130.90 area. It exploded about 60, 70 pips higher and then reversed direction. We got out at 131, took about 10 pips profit. But again, when we see price action not confirming our analysis, we want to be out of that market. And the way I really look at it is if the market explodes above unchanged and then comes back below the unchanged level, that's a market that I'm no longer excited about, and frankly I want to get rid of. So the US dollar versus the Canadian dollar, while it is an uptrend, it's still consolidating at price levels, and I think we want to leave this trade alone for now. But we've got, I think, a very exciting trade opportunity for tomorrow's session that I think we're going to make a lot of money on, frankly. So without further ado, let me introduce you to the next trade, the euro versus the British. So at the outset, I said I had a great trade setup for you guys, and I don't think that this trade will disappoint. Just as a background for those of you who are not familiar with my trading style, the first criteria I look at when I'm looking at a market is the current direction or phase of the market. So typically people will say that the market can only go in three directions: up, down, or sideways. I think there is a bit of a nuance in that markets can also be turning from bullish to bearish or bearish to bullish. And I think that's exactly what we're looking at here, where the major direction for the euro versus the British pound for the last couple of months has been clearly in a downward direction. But now we're seeing the emergence of a double bottom price pattern at or around the 69.50 area. We also have what I call an insurance day bar. So again, when I identify a pattern, I just don't jump in. I look for another confirming signal in what I've coined an insurance day bar. And in my parlance, it's either a key reversal, market makes a new low, close in the opposite direction in a market we're looking to buy. Conversely, if we're looking to sell, it'd be a new high and it would close on the low, or an inside day bar, something like you see right here. But in this case today, we had a key reversal, market went lower, closed in the opposite direction, and now we're looking to buy this market on a stop at 71.14. So basically we're going to buy this market on a buy stop at 71.14. Again, we look to the market action to confirm our orders. We don't just jump in at the market. This market could turn down and we're not filled, and no harm, no foul. So we're going to put in a buy stop at 71.14 and we're going to put a protective sell stop order just below the unchanged level at the 70.80 area. So again, this is a trade that I really like. You guys should really jump on this. I think it's a high reward, low risk opportunity, and it really conforms to our way of looking at the markets, where we see an established pattern, an insurance day bar, and if the market goes through the buy stop level, it's likely to be a fairly good trade. Again, this is August, so we advise you to be patient with your trading and risk somewhat less than you might ordinarily would. So if you would like to continue following our trades for the next 2 weeks, absolutely free, sign up on the link below, and we'll be back tomorrow to see how this trade worked out and if there are any new trades. So again, have a healthy and prosperous trading day. This is Mark for the Pattern Trader. Bye-bye now.